This is the Asian century. How many times have we been told that? But Asia is not some united entity. It's a massive continent of almost 50 countries. So the Asian age could also be the age of competition. China won the first 2 decades. It became the engine of global economic growth. But can India win the coming decades? A new report says yes, India can. India could replace China as the driver of global growth. And when could that happen? As soon as 2028. Now, just to be clear, this does not mean that India's GDP will overtake China's in the next 4 years. It means India's contribution to global growth will be higher than China's in this period. Basically, India will become the growth engine. And what is driving this change? Well, broadly 2 factors, China's fall and India's rise, as simple as that. Look at this new report by ratings agency Fitch. They have downgraded their outlook on China. It was stable before, now it's negative. And why is that? Because debt is rising and growth is slowing. In 2019, China's debt was 38% of its GDP, but now it's almost 50%, 56% rather. And by the end of this year, it could be 61%. At the same time, growth is falling. China grew by just 5.4% last year, and this year the projection is 4.6%. So the Chinese economy is losing momentum. Meanwhile, India is gaining it. The Indian economy is projected to grow by 7% this year, and don't forget the political headwinds. Many suppliers are moving out of China. They're scared of crackdowns and sanctions. And India is gaining from this. Just look at Apple. China has long been their top factory, but now Apple is diversifying. They assemble 14% of their iPhones in India. Take 7 iPhone models, chances are one of them was made in India. And this output is worth almost $14 billion. So China's loss is India's gain. But you cannot rest on those gains. You must build on them. The same report also mentions 2 things that India must do. First, continue the infrastructure push, and second, invest in human capital, basically skill and educate the people. The infra push has been a key priority for the Modi government. In this financial year, around $132 billion has been set aside. That's 3 times the allocation 5 years ago. And what will this money produce? Roads, highways, railways, airports, seaports, waterways. Things that will multiply economic growth. Better roads equal faster trade. Faster trade equals time saved, and time saved is money made. Another factor that works in India's favor is federalism. Indian states love to compete. Sometimes that competition can turn hateful and toxic, but in the long run, it can also help. It pushes each state government to do better than the other. Again, data supports this. 8 Indian states are expected to become trillion-dollar economies by 2048. What does that mean? These states will have a GDP of $1 trillion each. Now, to put that in context, India's current GDP is $3.3 trillion. Now, some states are hoping to touch $1 trillion on their own. And which are these 8 states? Maharashtra, Gujarat and Karnataka are expected to reach first by around 2040. Tamil Nadu, Uttar Pradesh, Madhya Pradesh, Telangana and Andhra Pradesh will follow. Of course, this is a projection. It requires consistent and rapid growth to achieve this. But compare it to China. Forget adding to the growth. Local governments are dragging China down. If you add all this together, the takeaway is quite clear. India is poised to replace China, to become the engine of global growth. And I know it sounds great, but it's also important to not be complacent because challenges still remain. One of them is investor confidence, not in the stock market because that's booming, but in Indian startups. A new report says India's unicorn count has dropped. A unicorn is a startup valued at more than $1 billion. Since 2017, India has only added unicorns. But now the opposite is happening. India's unicorn count fell in 2024. The country has only 67 unicorns left. But that's not the most worrying part. More than 130 unicorns were founded by Indians. But they set up these companies outside India. And that should raise questions. Why did they not set up shop in India? Is it the business climate? Is it the regulation? Is it the talent pool? And asking such questions is very important because you cannot take economic projections for granted. You need to assess and tweak as you go. Because one black swan event could change all of it. Like the Wuhan virus pandemic in 2020. One bad policy could set us back by years. So now is the time to keep your head down and work. Maybe take a leaf out of China's book in the 1970s. Bide your time.